Hey TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. We're also broadcasting on Facebook Live. We're also on YouTube at youtube.com/Dallas Trading Floor. We're on Twitch at twitch.tv/Dallas Trading Floor. And we're on Periscope, pscp.tv/Dallas Trading Floor. So here we are. Hello, everybody. How are you on your happy Tuesday? I just wanted to get into it right away here. Basically, it is somewhat unchanged. I mean, we're off a little bit on the NASDAQ, but we're still in a confirmed uptrend, and that's a really important thing, to note. We're in a confirmed uptrend, and, so you don't want to be short anything right now. The S&P is off a little bit. The Dow Jones is up. There's been some good movement there, and the Qs seem to be down a tad. So there we are. That's sort of your market direction. It kind of gives you an idea of how to trade the market. The spider, this is the weekly chart on the spider. It is down a tad at 328.55. That's an important level because above 320, we're pretty much sort of creeping back to where we were at the beginning of February, which is where before the pandemic took hold and the market dropped so precipitously. So we are basically getting back to zero, which is kind of interesting. It was a booming market and then not so much, and then it's been a tremendously booming market since. So that seems to be the trend. It still seems to be up, but there are some clouds on the horizon. There's large layoffs that have been indicated for the airline industry, also in hospitality, and several other fields that are customer facing. So you want to be careful if you're in some of those customer facing stocks. They can be a little bit tricky in this environment. The QQQ is up slightly, but down when this slide was taken. It's still above 250. That's a major key level for the QQQ. Now, what the QQQ is it's the NASDAQ 100, basically the 100 largest growth stocks, obviously including things like Microsoft and Apple and stocks like that. Very important index because it typically right now is where most of the capital is moving from the big funds. Many of the value investors have found that value is not so much value, and they are moving where the action is, and the action is still, even with the extended PE ratios, the action is still in the Qs and the NASDAQ. So something you want to be concerned about when you're choosing stocks to possibly enter. You want to make sure that they are trading probably in the top third of all the stocks. And there are 197 different sectors. So you want to kind of keep towards the ones that are more towards the top because they tend to be more favored by the funds, and that will probably yield you a better result. So that's basically the way that goes. The Dow Jones is up slightly, 45 cents, up about 0.17. That's where we're looking at the Dow. And it is it's moving up, but it's not quite back to where it was the level when it was trading before in February. So still down on the Dow for the day. Just wanted to show you a trade alert that I have sent out. This is a very interesting trade. It's a bull call spread, and it's on a leading home builder. There's been a lot of action in the home building stocks as of late. We are seeing them basically move higher because of the limited number of homes that are available. Now, for everybody out there, I have this deck, so you can see that at your leisure. Let me put up oops, that's the wrong one. I want to put up the correct one there. Today's slides are available at bit.ly/32RBRJ6. So hopefully that will work for you. Wait a minute. And these are the VIP trade alerts for this particular one, and just so you can see it. And by the way, if you are not signed up for our action trade alerts, they're available just by going to DallasTradingFloor.com and signing up for the free subscription to the action trade alerts. And I put out these every once in a while when I am trading, typically several times a week, on good opportunities to make a good trade in the market. So let's go through it real quickly. Basically, what this is it's a home builder, and the way this works is that you sell a 18th September call contract. Typically, when this was made, it was right at about 8.15. That was the price. You buy simultaneously a 62.50, which is about a $5 spread, and you're buying that typically, and at 12.05. That's when this slide was made, for a net debit of $390. And we expect the home builders should do very well, and so there's a good expected return on this. Basically, it should move up, and our maximum return on this one is about 110. Basically, for not very many days of movement, and it's a pretty low risk based on this chart that I have. This is the stock here for Lanier, and just really quickly, this gives you the payout matrix of this. So typically, with this, if you hold it all the way till expiration, you're looking at a profit of about $110 per contract, and of course, the net debit is $390. To go into the trade. If you're interested in this trade, all you have to do is go ahead and subscribe to the Action Trade Alerts there at DallasTradingFloor.com, and we have them there. So let's get on to the what's going on today. So let's see. Hey, thank you, Marcia. Appreciate it. What the hell is it? Got a lot of good comments here. Let's see. Not getting any. Oh no, you're not getting Action Trade Alerts. Ouch. Here's what you could do. If you could, please send. Please put that in the comment and send it to. Go ahead and write me through Dallas Trading Floor, and just put it in the comments. Ask a question. I'll make sure you get on the list. I'm sorry about that. I moved over to a different email provider, SendFox, and from MailChimp, and sometimes they don't quite get there. So I'm ironing all the details out. So apologize for that. But if you just send it over there, I will make sure that you get hooked up on that real quick. So great. All right. Netflix is showing some strength. Time to buy calls. Well, I don't know. Here's the problem right now with Netflix. I'm out of Netflix, by the way. I just wanted to be clear up on that. Netflix is in a situation where they are pretty far extended from their buy point. They're at 507 currently. Let me pull up the chart. Oops. On that. Oh goodness gracious! Did I get? Let me pull up the chart here for Netflix. All right, that's one for Lanier. NFLX. I just want to show you this chart real quick here. Yeah, there we go. Super. And let's take a look at the chart. Basically, the situation here is on Netflix is the last buy point on this was about 589.97, right about there. And then it's moved up, and then since down, and then it's moving back up. I would like to see this make a base before I did an options play on this. Just a little bit too risky. I want to see if we can move up into this about 520 range. Currently, it's trading for 508.03. That kind of gives you an idea of where it's at. Very good chart, very nice uptrending chart. The relative strength is 89 on this one, and is trading above the 40-day moving average as well as the 200-day. So it's a good chart. Let's take a look at just switch to the weekly view here to see if we can get some more information. I don't think this is really where you want to be on terms of in terms of the play right now. The reason being is that we are right below a pivot. So, let's see if we can move on a pivot here. The pivot is basically about the pivot. Yeah, right around the pivot. Okay, so not necessarily bad. I wouldn't. Yeah, I mean, you could definitely do an options contract on this one. I mean, we are fairly close to a pivot. We're a bit above it. We're somewhat extended. Not too much though. Not too much. You don't typically want to do an options to buy naked options if you're too far away from a pivot. It just can fall. It just can collapse too much on you. So that's kind of the thing that we're looking at there. So not necessarily a bad place to do calls. Okay, high signal. Thinking buying APPS. What are your thoughts on entry point? Okay, well, let's take a look, see if we've got something for APPS that I can find. Look at, see if we can get a digital turbine. Interesting. Okay, well, let's see if I can get a chart. Let me show you the daily chart on this one. And let's see. Okay, wow, we're moved above that 15-day. Relative strength is high. We've got good buying activity. Look at the weekly chart here for actual buy point. I think you're. I think it might retrace a little bit here. I think that we should wait until it moves down a little bit for a handle. We have a cup, but we don't quite have a handle here. So, I would see this thing trends down. If it trends down a little bit like this, down to about the 13 level, then you might want to go into it. Now, remember, you only want to buy an uptick, and currently it's on an uptick, and it's a little bit past. It's a little bit extended. It's a little bit dangerous to buy it here just because it's extended a little bit above where I think the pivot is. The pivot, I believe, is about 1250, and that would give us a buy range up to about 1350. So we're about $2 beyond that. It's not a bad chart, but I would wait a little bit on this one. Put this on the watch list and see if it moves back to about the 1350 range. If it does, and then it starts to make a move upward, that's when you want to go. I think we're a little bit above. We're really extended on the pivot. The pivot, I think, is going to be right at about the pivot. Yeah, the pivot was basically, the last pivot you see was 784. That was the last pivot. So we're pretty extended from that. So I don't know. I don't think there's a good entry point here. I think I'd wait to let it settle. I think there looks like a next pivot is accumulating here right about the 1250 mark. So that's where I would say to go on that. I think that would be where you would go on that one for the pivot. So it's not time to buy it yet, unfortunately. Fujifilm. Okay, thank you very much, Stock Talk from Calgary, Canada. FUJ, I don't really recommend this one because this is, I don't think this chart is all that great. Yeah, it isn't. It really isn't that great. So let's look at the chart here. This chart is not trending the right way. I like the idea of it. There's just the 1, 2, 3 bases. Yeah, no, this one just, unfortunately, it's moving back up to the line. Let's see if it moves back up to this buy point here, which is, let's see if it can move back up. But no, this is not a viable stock right now, unfortunately. I'm sorry about that. It just really isn't. Okay, so from TikTok, let's see. Okay, CCX. That's an interesting stock. Let's take a look at CCX real quick. See if I can pull that up. CCX. Oh, Church. Okay. Huh. Okay. A blank check company. Yeah. I don't think you want to be in this. I don't think you want to do this. I'll show you the chart. It's not really good. This is what they call a blank check company, which is basically just a blind pool. Here's my problem with blank check companies. Blank check companies basically are just pools of capital that may or may not turn into anything. It's not a particularly good chart, and it only has a relative strength of 51. I think you want to skip this one. Okay, so let's take next one. Is it worth investing in? No, I don't think it is. Should I sell Fastly? Oh, good question. It's interesting. I know somebody that actually works for Fastly. I think it's a pretty good company. FSLY. So let's just kind of look at how the chart looks on Fastly here. Oops. FSLY. Yeah. Okay. Okay. It's the weekly chart, so very good. This is a fairly new issue. It's really only been out there 1, 2, 3, 4. Yeah, it's about 5 months. It's somewhat have discovered. This is a very common chart for IPO. It starts out high, it then moves lower, and then moves lower. Then it starts to get discovered, moves up, and so it looks like it has been discovered by some of the people in the institution. So let's take a look to see if we've got 44% of funds are in it. That's a good number. At 115, it's moving very nicely. I'd like to see some consolidation around here. It seems like it has a range, a very large range, from about 80 to about 120. That's a long range, and it is at the top of its. It is at the top, so it does look like it's moving higher. I just don't know. It's a little bit early. It's a little bit early for me on this one, but it did have some nice, earnings. Oh, okay, I see why it's moving up. Okay. I don't think you want to buy this one today because you don't really want to buy as you're coming into earnings. Earnings are tomorrow for this stock. I'm sure they'll be pretty good. It looks like they're going to be pretty good, but the thing you don't want to buy before earnings because you're likely to get disappointed, even if they have excellent earnings. That's typically the way it works. Is it comes into earnings and then and then it will drop. That's a typical movement for a stock like this, is for it to come into earnings, move up, and then drop. So that's kind of, I don't think you want to be in Fastly, but let's see. You were asking if you want to get out of Fastly. I think that's probably a good idea. It's probably a good idea to pull the ripcord today. I don't think you'd be too that would be too bad of an idea if you did pull the ripcord today on this stock. So that might be the way to go, and pull the ripcord. So and then buy it on the other side if you can do it that way. So great. All right. So let's get to the next question. Hey, Grandpa Paul. Hey, when is the correct scenario you buy calls on a stock? Wow, good question. Well, let me explain, first of all, what a call is. I'm sure that you know this, but a lot of people out there may not exactly know what this is. A call is the right, but not obligation, to buy a particular stock at a particular price. That's the strike price. So if you do believe a stock is moving higher, then you might want to purchase a call. Now, here's the problem with purchasing a naked call. Most of the time, 70% of the time, people that buy calls, they lose on them, and the reason is not because they're wrong. They're usually in the right direction on the stock. The stock is going up, but there's not enough time on that call because it's a limited time. Now, when you're selling calls, it's different. Selling calls is always a good strategy, especially if you have the underlying stock, because you have a very high likelihood of success that way. But you want to be in a call if the stock you think is going to move up in the long term. Now, here's the thing. If you do buy a call, you are limited in your risk because you pay for that, and then if it expires worthless, but you have the option to buy this underlying stock at a lower price if it goes higher. So that spread is going to be be an increase on the stock. But you don't necessarily have to hold it all the way until the expiration. Think of a call as sort of like a lease on underlying stock, kind of like you would have a lease on a house. You can rent it out sometimes to somebody at a higher price, and that's kind of how it works. So that's really what a call is all about. All right. Next question. What is a pivot? Very good question. Well, in stock investing, there are various chart patterns. There's about 7 of them that are very good. Now, starting to make a series on YouTube about this. One is called the cup with handle. One is called the cup without handle. There's a double bottom. There's a 3-week tight, and there's several other ones as well. These patterns basically hold a stock in a certain position. Now, I know that sounds kind of like a strange concept to you, but what it is that stocks don't go up straight or down. They kind of go to levels. So it's sort of like an elevator. The elevator goes up to the floor, and then it waits a little bit and may move up and down a little bit, and then if it gets enough pressure, it goes up to the next level. So stocks typically step up, and that's why if you can find a pivot point, that's a good time to purchase a stock, because the chances of it going below that are far less than if it is not at a pivot point, because it kind of holds it. It holds the stock price at that level. Now, how do you find pivot points? Well, you look at charts, and then on the charts, sometimes you will see a pivot point. So let me see if I can show you a pivot point. Now, I'm gonna type in. I'm gonna show you the chart for Apple. I believe that I have some good pivots on this one. Yeah, okay, there we go. So I'm going to show you what a pivot looks like in a chart pattern. Here we go. We're going to go right to the chart here. This is the chart for Apple. And as you know, Apple is run up very close. Now, there's two pivots on this one. There is the first pivot here that I'm showing you. I don't know if you can see this. It's a green line. It's a cup, and then there's a little bit of a handle that it goes down. So it goes cup like that, and then the handle kind of goes down. And then typically when it gets to the low point there, it pops up and it moves above the 40-day moving average, and then it starts its ascent, and it just kind of moves right up on there. And where the buy point is, the pivot, is where this little dotted line is. As it moves up, it comes to the higher high, and then when it makes that higher high, that is the pivot, and it typically will then consolidate there and start to move higher, and it did. This is Apple, and it did. Then it gets to a point where it kind of runs out of steam, and then you see it move in this cupping action again. And what that is that the strong holders that have it are willing to sell, and they're not willing to just demand any price. So the price kind of goes down. It goes down in a cup, and then once it comes back up to the level that it was at previously, then there's a pivot there, and then it starts its movement upwards. Typically, this is what they call a base pattern. And so a stock typically will have 1, 2, 3, or even 4 or 5 bases. But the further it gets from the first base, the weaker the upward momentum is. Now, on Apple, the momentum is very, very good. It's only in the second stage base. So that is what a pivot is. And it's kind of but if you want more information on this, I'm going to be making some videos on my YouTube channel, Dallas Trading Floor, at youtube.com/Dallas Trading Floor. So thank you very much for that question. That was a very good question. Let's see. Do you think APT is a good buy now? Well, it's hard to say without looking at the part. Always before you buy a chart, you want to look at the chart. And the first and most important thing, and I know this sounds very kind of basic. I have my intern in here, and I said, well, I asked him, well, what's the first thing you do when you look at a stock? And he kind of grimaced a little bit, and he went into a technical thing. And I said, look, it's look at the chart to make sure it's an upward trend. Okay, so let's look at APT. It looks as if, yes, it's an upward trend. So it passed the first test. Well, the first test is it in an upward trend? Well, it does appear to be an upward trend. But here's the problem with this chart. It is not currently. It has very low fund ownership, only 22%. And it is it's relatively inexpensive stock, but it is. But here's the problem with it: it has not come to a higher high. As you can see, there's a spike up here at about 49. So this isn't really viable until it reaches about $40 a share. But the chart is going in the right direction. It's got a very good relative strength at 99, which is excellent. But I wouldn't be in the stock until it showed some conviction at about the $40 level because of this spike up here. So that's my opinion on this particular stock, APT. All right, so let's see. Where are you streaming? Well, I am streaming on, by the way, for everybody on TikTok, I am streaming live on YouTube at youtube.com/Dallas Trading Floor. And if it just brings it up to I have to reorganize my my landing page, but this is number 102. So just Dallas Trading Floor, youtube.Dallas Trading Floor. That'll bring you up to the Dallas Trading Floor page, and then type in Dallas Trading Floor, the number sign 102, and it'll bring you right to it. Also, we're on Periscope as well. That's pscp.tv/Dallas Trading Floor, and I'll be showing all my charts on there as well. Okay, so all right, Where else? Okay. Head and shoulders. Okay. This is interesting. The head and shoulders formation. This is another formation. This is typically used not in taking a stock long, but taking a short. So many times traders will look for the head and shoulders formation for a stock that is going down. We don't want to do that. You saw my ADP cup there. It kind of pixelated there a little bit, trying to get everything right. We don't want to use a head and shoulders formation when we are buying stocks long. Now, if we were buying stocks short, that is the best formation to buy stock, to sell stock short. But currently, we are in an upward trending market. And I want you to be very reticent of this because this is extremely important. And this is where people get into a lot of trouble. The first thing you do when you start to look at the market is you look to see what the general market direction is. In this case, the general direction is up. This is why I always show this slide the first every time. In an upward trending market, we want to look for base patterns. That's cup with handle, cup, double bottom, 3-week tight, those kind of patterns. Now, if we were in a downward trending market, this arrow would be facing down. In those markets, we want to look to short the market. And when we look to short the market, the head and shoulders pattern is the correct pattern to look for. But right now, we are long, so we don't want to be looking for the head and shoulders. This is a question on KL. This is actually one of my favorite stocks right now in the gold area. KL is Kirkland Lake Gold, and for all that you don't know about it, it's a Canadian company, but they have operations in both Canada and in Australia. It's trading today. Let's see. I'm going to get a daily chart on it today. Normally, I would show you the weekly, but I'm going to show you the daily chart on this. It looks pretty good. Here we are. Is it a hold? Good question. It looks to me like it is in. If this was bought properly, the pivot on this was 44.23. This is this dotted line here, and this is the buy zone. Remember, the buy zone is the pivot point plus 5%, giving us a buy range. If you had bought at 44.23, this would be a time possibly to sell your position at this point because it is in the profit-taking position. Now, here's what you did. Now, why do I say that? Well, if you buy a stock and it moves up 20 to 25%, you might want to consider selling it because it typically will not have enough pressure to move higher. So that's the ultimate time to take a gain in the stock. I did that this morning. I was trading Retractable Technologies, RVP, and what happened on Retractable was that it went up over 20%, but then it started to get a little bit of weakness. I set my stop loss at 20% profit. It came down this morning and it sold me right out, which made me make an automatic 20%. So that's kind of how I like to play it. And I think it's a really safe way to play it. You buy the stock right at the base at the from the buy point up to about 5%. When you do that, then if the stock moves up, you just move that stop loss up until you get to about 20% profit. And then if it does come down, you're sold out and you get the profit at 20%. So that's a good way to go. So typically you want to be taking your profits at about 20%, 20 to 25% level. Now, there is a caveat to that. If it does move up 20% or better in less than 3 weeks, then you want to hold it because it's probably going to go higher. It's got a lot more pressure. But typically, if a stock from a good base comes up 20%, that's where you want to sell it. So kind of an interesting thing. Right now, I think KL may go higher, but it is not in a base pattern. It's a little bit risky to hold it at this point just because it is extended from that pivot quite a bit, the pivot being about 44. So just a thank you for that. All right. So, hey, yeah, thank you. Okay. So, hey, Long, what do you think about INTC, Intel? Okay. Well, it's been kind of weak as of late. So let's look at the chart for INTC. I just want to take a quick look at it at Intel. Let's look at the weekly. Okay. Yeah. It's kind of not. It's not doing as well as I would really have hoped it would do. And let me kind of show you this. We've got 1, 2, 3 bases, which is good, but it doesn't. It just broke this line. It broke the 200-day line. And there's huge sell. This is a sell signal. By the way, I just want to be clear about that for everybody. When you're looking at a chart that it goes 1, 2, 3 bases, and then it moves up, and then it breaks down below the 200-day moving average, which it did here on high volume, which it also did. See, this is very high volume here. This is a sell signal. So sell this thing immediately. Unfortunately, it is not a winner. Okay, let's see. Okay. NUAN. All right, let's look at NUAN. NUAN. Okay. Nuance. Oh, this is kind of a cool company. I know a little bit about this, not a whole lot. Boy, it's extended. It is extended. It's very, very extended. Let's take a look at the chart. All right, here we go. This is the weekly. You always want to look at the weekly chart to see kind of where to buy, where to sell. Okay, it broke out. It's got a base here at about 16. That's not really that great. Okay, there was a buy range here. Yeah, this is a tough one. This is a really tough one. I would put this on the watch list, see if it formed a base. But right now, this isn't formed a base. It's a little bit risky to buy it. It's very extended from its last base. So I don't know. I would put this on the watch list. I wouldn't buy this one right away. I wouldn't. It's a little bit too risky. One of my favorite stocks. What thoughts on Datadog? I like this stock a lot. So let's look at the chart on it. It's DDOG. All right, Datadog. Okay, well, and it's 1, 2, 3. So it's just about ready. It's almost an IPO. It's almost time to buy it. You typically don't want to buy an IPO in the first 3 months. It's just too hard to buy them. Let's see. It looks like it's stepped up. There's a buy point there, buy point there, buy point there. It's very extended. Yeah, there's a buy point at 50. It looks like, and it's already wowee. It's at 92. Wow, that is terrific. It looks like it's going to form something here. I would watch this one, see if it forms a base here at between about 85 and 95. See if it forms a base there. It's up significantly, but there's volume problems here. The volume is down a little bit. Very good, very good ownership for the funds. It's 40% owned by the funds, 60% owned by retail investors. By the way, typically the best stocks are owned predominantly by funds. I really like to see fund ownership of about 60 or 70%, because that typically it makes it easier to trade, and it typically is more stable. So, but Datadog is not bad. I would watch this. I wouldn't do anything else. Blink do you think it has any more room? I don't know, man. This has been a good one for me. I had Blink, and I moved the stop loss up today, and it just seems like it's moving. I'm not trying to get in its way. I'm just trying to let it run, and I'm just moving my stop loss up. I'll probably I suspect I probably will move my stop loss up to about 25% off of where I bought it, off their base. I basically bought it right in here at 640, right here, right at this. You see this peak here? That's sort of where I bought it, where that red line is there at about 640. It's moved up since then. I do have a stop loss in on it, but I'm continuously moving that up. I think it's probably time to take profits if you were in about 640 or so, because it's probably going to move down a little bit. But keep moving the stop loss up. Don't pull the trigger until you until you see the profits. So keep moving that stop loss up. Oh, DraftKings, cool company, DraftKings. It's DKNG. So let me look at that one. DKNG. And by the way, there's another stock like this that has sports gambling, and that is Penn National Gaming. PNN is the symbol on that one. Wow, interesting chart. yeah, just really, really early, really tough to buy this one. It's an IPO, tough to buy them. It really is very hard to buy them in the first 3 months, as you can see, because they just go crazy. But it looks like it's got a lot of support. Typically, this is the way it happens. It'll come out, it will be bid up by retail investors, and then we see, it drop off because people sell. The initial holders sell off. They make their money, and then it starts to get discovered by some of the funds. Now, it is a little bit underwhelming in terms of the funds. There's only 31% funds in this one, about 70% retail investors. So that typically makes it a little less stable, but it is moving up very nicely. I wouldn't buy this one until I saw some conviction in it. I probably wouldn't buy it below about 42. So, and we're quite a ways off of that. We're 33.06. So this is a watch list stock. I like the stock, but I don't want to buy it yet because it's just not ready. And it's like everything else. You got to watch list them until they come into the right chart pattern, and then that's when you want to go on them. How much annual return do you have on the average for the next 5 years? Well, it just depends. I mean, some years I do really well. I mean, this year I'm doing, several 100%. I shouldn't really tell you, but yeah, I'm doing very well this year. Last year was a little bit more difficult. I only doubled my money last year. So, if you trade right, you can do very well. You can double and triple your money every year, believe it or not. And some years, not so much. And I've been through some of those. So, but yeah, typically I do a little bit better because I typically trade out of my positions before they have totally given up all their profit, and I move into other ones that are moving up. So I do recycle my money a lot, and that's part of the reason I get sometimes a little bit better. I get a little bit better return than if I just did a buy and hold. By the way, typically with buy and hold, you're just not going to make as much money. It's just that's the way it is because the opportunities flow to where the capital is going. But if you want to do that and you don't want to trade a lot and you basically don't want to do this every day, there is a fund out there that I think you might be interested in. It's called the FFTY. And basically what it does is it tracks the IBD 50. And I'll show you this ETF. And the advantage of this is that, you just don't need a whole lot of money to trade this. And it's gotten very, very good returns over the years. This is the chart for the FFTY. As you can see, it's a little bit, and this is the reason I trade individual stocks and not typically ETFs. It's got two nice cups, and it definitely is on the ascendancy. The buy point here was about 36 on this. It's trading at about 37.90. This is a way that you can trade the best growth stocks and not have to, and not have to trade in and out and not have to, do everything like that. So that's kind of a good way to go. If you want to do it with less trading. Can you please do an analysis on C? Oh, this is an interesting one. Thank you very much. I got a question on the comments. This is a very good chart, by the way. SRNE. So let's take a look at the chart and see. And it finally became viable. I'll pull up the chart here. Here we go. Pulling up the chart now. There we go. Here's the thing about this one. We're above the higher high, and that's very, very important. When it passed the $10 market, that was really when it became viable. Now, it still doesn't have a really good chart pattern. I'll be honest with you. This does not have a great chart pattern yet, but it possibly is worth buying because it has got such powerful movement. It's near its high. When a stock is moving like this, and it's got volume like this, typically this is going to move above this 1050 range. So I do think this one possibly is either one you want to watch list or maybe buy with a half position. Now, what do I mean by half position? Well, if you take the value of your portfolio, you divide it by 8, there's 8 full positions in your portfolio. So for instance, if you had a $10,000 portfolio, it would have 8 $1,250 positions. The maximum that you would want to commit to this would be a half position or half of that. If on a $10,000 portfolio, the maximum you would want to go into this one with would be about $625, because if you go in more than that, you too much of a risk. Now, if it does continue on up, you would then add another half position. And then once you're at a full position, if it continued up on there, you might want to add another full position. But typically with a stock like this, where it doesn't have a pattern, but it does look good, you typically go in with a relatively small position. I'd recommend a half position on this one if you wanted to go into it. So it looks like a pretty good chart. And yeah. So what do you get there? This is a good short-term or long-term stock. It's really hard to say if this is a good short or long-term stock. I want to see this thing with more conviction. I want to see it either a cup or a cup with handle or a 3-week tight. I want to see a base pattern before I'd really be excited about this. So that's why if I did go into the stock, I'd only go in with half position right now. And that's my answer. Okay. SSNT. Interesting. SSNT. Let's look at SSNT real quick. SSNT. See if I can get. Oh, this is another one. Oh yeah, this is a hard one. This is going to be a very, very hard one but it does have some fun support. So it's just a watch list. The problem with these biomedical therapeutic stocks, they tend to be. Yeah, I don't think you want to do this one. There's 26% fund, so it's 74% retail investors. It's spiky. It does have some earnings it doesn't have any earnings per share. Yeah, stay away from this one. I think there are better ones out there. Really, really honest. I think there are better ones to go with. Let's see. What do we have here? Okay, so Head and Shoulders. Okay. Activision. I haven't heard that name in a long time. Activision. Wow. Let's see if I have. I'm just going to go and see if I can find. See if I can get something for Activision on this. Activision. Well, I haven't seen that one in a long time. AC. Right. Activision Blizzard. ATVI is the symbol. Yeah, it's up really nicely. Not a bad chart. Yeah. It's got strong buying. Yeah, this is a decent chart. Let me see how its competition is. Okay. Let's go. ATVI. Let's see. Activision Blizzard. Let's look at the chart on this one. Yeah, this is definitely a buy. It's a little bit extended out of the buy zone. Now, about the profit. Okay, so this is essentially a cup. The last buy point was here. It's got relative strength of 90. That's excellent. It's above. Yeah, I think the buy point is here. The buy point is 75, 76. So it's a little bit extended. It's a little bit extended from the buy point. The buy point is up to about 82, but it's really close. If this thing backs off a little bit, you might want to consider waiting for it to move up again. If it backs off a little bit, down to about 82. 82 is about the maximum that you want to buy this at. But I think this is a buy. I think this is excellent. I think this is an excellent chart. I really believe that. Okay, we have a question on Virgin Galactic. This is an interesting stock. I've made some good money on this stock, by the way, but I've always done it by selling it before earnings. I just, I've never been, this is not one. I don't think you want to hold through earnings. There's a lot of hype on this one, and yeah, here we go. Yeah, it's off after earnings too. It always follows that pattern. Okay, I want to show you a little bit about this. I think this is really interesting. This is the weekly chart on it. Now, I haven't been in it since earnings last time, and you see it peaks up and then it pulls down. Well, guess what happened this time? It was up, and then it's down. So remember, try not to buy a stock like this prior to its earnings, because there's an old adage, buy on rumors, sell on news. And, I think everybody's excited about this going into space, Richard Branson, everything. But unfortunately, it's a lot of hype. And then what happens when there's hype, it just moves off. Now, Another issue on Virgin Galactic is that this is a stock that is not very liked by institutions. Individuals like this one, institutions not so much. It only has 13% of fund sponsorship in this one. That means that most people are retail investors, so it's going to be a very emotional stock. Typically, the more retail investors, the more emotional it gets, and that can be very deadly because it can run up and then it can just collapse very quickly. All right, so what price should we buy Apple for? Let's put up the Apple chart. I still think that we're in a buy zone for Apple. I did most of my buying for Apple on the trade alert that I sent out on the weekend, because Apple, as you know, is going to split on Thursday. Announced that it was splitting 4-for-1, and I put in a trade alert on it. But I am definitely in Apple big, and I do think that we're going to see very nice action on it. Symbol, of course, is AAPL. Let's pull up the chart. Okay, I'm going to show you the chart on Apple, and let's look at the buy zones. Okay, well, we're really extended beyond the buy zone. This is the blue. This is the blue here. This is really an extended beyond the buy zones. I would love it if I could have bought. I bought it at 409, and I bought it at about 435, and then it's moved. It's tend to hold about 435. I do expect, based on my analysis, that Apple will retreat a little bit, probably maybe down to 425, 430 in there. I still think it's a buy because we have not seen the peak. The peak of this stock typically would be right before the day that it splits. Now, here's how it works. If you are a owner of record on August 24th, then you will get the 4-for-1 split. If you get into the stock on August 25th, guess what? You don't get it. So you want to make sure that you buy this thing before August 24th. That's very important. And on August 28th, that's a Friday, the stock will split 4-for-1. So typically the highest value of the stock is on the day before it splits. So that would be August 27th. So I do expect a run up to August 27th. Then on August 28th, it will split. And then typically after it's split, people have extra shares that they sell. That tends to depress the price a little bit, and the stock will move down after that. So if you're not interested in holding the stock and you just want to make a profit on it, the best you can do is you buy it probably right about now, or maybe up through about Wednesday, maybe tomorrow, and hold it till about August 27th, and then sell it. And then after it splits, you can buy the shares that are discounted, probably for less than the shares on the August 27th. That's typically how it works, but this is all in my trade alerts. And by the way, you can get on the list for those trade alerts. You can subscribe to the trades, and they're totally free just by going to DallasTradingFloor.com and just going into the subscribe and putting the information in there, and you will get on the list, and I will send you out a trade alert as fast as I can. Now, here's the thing. If you are on TikTok, we may get banned from TikTok. I hope that doesn't happen, but things are happening with TikTok. So if you want to continue watching Dallas Trading Floor, please move over to either, the best would be YouTube, because everything I have is on YouTube. It's youtube.com/Dallas Trading Floor. Or I'm also on Periscope, pscp.tv/Dallas Trading Floor. And here's my address for everybody that is on Facebook Live, Twitch TV, or Periscope on YouTube. So it's youtube.com/Dallas Trading Floor. And you can put that seer in there or not. It's youtube.com/Dallas Trading Floor. And if you are watching on TikTok right now, the easiest way to subscribe to the Action Trade Alerts is just by going to my profile and then clicking the link, and you'll be taken right to the sign up page. So you'll be right on it. Okay, let's see. All right. How do you decide buy zones? Well, there's a lot of different ways. I could talk for hours about buy zones, but buy zones typically are the pivot point plus 5%. And there is a way to find this if you don't want to calculate them yourselves. There is a website called TradingView, and it does have pivot points in there. And so that's a way you can do it. But typically what happens is that you have a pattern, such as a cup with handle or a cup without handle, or a 3-week tight or a double bottom. And then when on the other side of that, when the stock price makes a higher high, that typically connotes a buy point. And then once that buy point is made, it's the buy range is the buy point plus 5%. So that typically is the way you want to go. So you typically want to buy it in that range, and then if it achieves a 20% or 20 to 25% gain, you want to consider taking some of your chips off the table, because it probably will be weakening its ascent. But that's really what you want to do. You want to look for the right setups. Those are the buy points. You want to buy them within the buy range, and then you want to hold the stock until it gets to the profit, the first profit potential, which is about 20%, and then up to about 25%. So that's kind of in a nutshell. What you constantly can do, by the way, this is all covered in a very, very good book, and I probably will try to start giving these away on the show, and that is How to Make Money in Stocks, a system for good times and bad, by William O'Neill, and he is the founder of the IBD. And this is really a really, really great text, because it really tells you how to read charts, and it takes away almost all the mystery. So it's a really, really good thing. Okay, what happens if you were to buy Apple between August 24th and 31st? Very good question. Thank you. Well, basically what happens is you are not an owner of record. So you would not get the 4-for-1 stock split. So basically you'd end up buying the stock at about $450, and then the stock would go down to probably about $125, because you would not get that stock split. So you probably don't want to be a buyer after August 24th, because that's the date of record for the stock. Typically what will happen is that up to August 24th, the stock will be trading in the $400 range, maybe $450, maybe $475. And then on the 25th, you will see the stock start to trade basically as a quarter of that price, because the stock list is 4 to 1. You won't actually receive those shares until the 28th. That's a Friday. And then after that, typically what will happen is people will sell off parts of their position. If they had 25 shares, they would have 100. So they might say want to get rid of 20 of them. So that will depress the stock price. But basically, you want to be an owner before or on August 24th. So thank you very much for that question. It's a very, very good question. All right. So what is your opinion of Forex? Well, I don't really trade a lot of Forex because, frankly, I have enough to handle just in the equity market. And I've always done very, very well in the equities. It's not that you can't do well in Forex. It's just a kind of a different thing. One of the things about Forex that I don't particularly like is that it's heavily manipulated by governments, because they're trading currencies. Now, you can make a ton of money, and it's and as a day trader in that, but it's high risk. And my viewpoint is, why risk all this much money when I can make as much money trading equities with a lot more safety? So that's why I typically stick to equities. I have nothing against Forex. It's just that I think that some of the best opportunities in the market today are in equities, and specifically in growth stocks, and specifically in NASDAQ stocks. So those are the ones that I truly like, and most of my strategies are based on. So FYI, I'll show you my current holdings, and you'll notice that I did drop a stock today. It was Retractable Technologies. What happens is I achieved a 20% gain on it. I had a stop loss set, and I was sold out, and so of course I got the 20% gain, but I'm out of the stock now. So here we are. This is my current holdings as of today, and basically I'm in Apple. I'm in Blink Charging, Tesla, Audio Codes, and Qorvo. That's it. Can you believe it? Very, very, very few stocks. I probably will be adding some stocks, but I did sell quite a few stocks on Friday. So I am looking for good deals, but I'm only looking for the very best deals right now. So that's typically the way I am going. And I will have, hopefully by the end of the week, I'm going to have some very good up-and-coming under $10 stocks. Typically, it's a little bit more dangerous to trade under $10 stocks, but the price is so low that if you trade them right, you can do very well. And Blink and Retractable were both under $10 stocks, and they performed extremely well. So you don't necessarily have to have a huge amount of money to make money in those kind of stocks, and also other stocks as well. Future of Kodak and Apple. Well, here's the thing about Kodak. The reason Kodak got that huge government contract is because we have a problem in this country, in that we have outsourced all of our production of many of our generic drugs to China, and that's a problem. But and Kodak, which used to have a huge business in the chemical photography business, unfortunately went bankrupt. So Kodak has the capability, the chemical capability to make drugs. By the way, the pharmaceutical industry and the chemical industry are actually very, very closely allied. This is kind of a strange thing, you think about it. But so that's the part of the reason. I think Kodak will be an excellent partner, because many years ago I loved photography, and I had a darkroom and the whole thing, and I always bought Kodak stuff, and it was just absolutely the best. So I do believe that Kodak will make some of the finest generic drugs that you could buy. Their reputation for quality is just tremendous. Now, I don't know how they're going to continue trading, but it's obvious why they went up. I mean, this is a huge contract from the government. It's a big check mark in their favor, and I think that you're going to see them probably expand. Hopefully, they'll be back. Eastman Kodak used to be a really great company, and unfortunately, because of the fact they were in the chemical photography business, that kind of went away. But if they move into the drug space, I think that would be super, because they're a great manufacturer, a great American manufacturer, and they're very, very important. They're a very, very important company in upstate New York, which has a very high unemployment rate. So I think that's a really good thing with them. All right, so I'll give you an idea of my portfolio as it stands currently. Let's see, any more questions? Oh, can you please explain option writing? Very good question. Well, one of the things that I do as an investor is I many times will sell options on portfolios that I own. And let me kind of give you an idea of how that works. I'm going to show you an example with Tesla, because some of these options are very, very rich. Now, basically, there is an investment called a covered call, and what you do with a covered call is you own the stocks you own in 100 units, and then you sell the right to buy them from you at a later time at a higher price. Here is an example of a option that I just sold on Tesla. So let me bring this up here in just a second. Nope, no, it's Taiwan Semiconductor. Okay, Tesla, perfect. Okay, so I'm going to look at the expiration on August. Okay, let me look at the August expirations. There we go. Let me just pull this up here in a second. Hope it'll come up in just a second. There we go. All right. So here's how that works. There we go. Trying to get the option chain up here. There's a lot of information that's being written. Okay. All right. Okay. Does not want to let me have it. Okay. I might have to beg off on that, unfortunately. Yeah, there we go. No, there. Okay. Okay. There we go. All right. Let me show you how this works. Okay. So I'm going to show you a chart of, this is what they call an options chain. And what this is how the options are trading. If I happen to own 100 shares of Tesla that I bought some time ago, it's a little bit less than $1,000, but I don't necessarily want to sell it right now. But if it was given a good enough price, I probably would want to part with it. If you do that, you can sell the right to buy it from you. For instance, if I sold a right to buy it from me at $1,500 a share, they would have to pay me a premium of $22.50 if it was to be bought between now and Friday. So that is what you do when you write an option. So I would get this times 100. So basically $2,350. If I had the underlying Tesla shares and I sold the right to buy them from me by Friday for a price of $1,500, That is what is writing an option. Now, when you write an option, you sell that. And when you sell the option, you get a premium. The premium is equal to the price of the contract, one contract, times 100. Now, every contract represents 100 shares. So in order to do a covered call, you need to have 100 shares. But you can sell them naked, but then you are required, if you're called, you're required to go and buy the shares in the market. So you probably don't want to do that with a Tesla, but if you do have the underlying shares, it's a good way to make money. So that's what writing an option is. It's selling the right to buy shares from you. And remember, each contract equals 100 shares. Okay, so let's see. Thoughts on ADT plummet today? I didn't know. FNKO. Let's look at FNKO. I'm right about an hour, so I'm almost out of time. This probably will be my last one. FNKO. Let's see how that looks currently. So let me pull up that chart. FNKO. FNKO. There we go. Funko. Funko. Okay, well, toy manufacturers. I haven't seen those in a long time. Okay. Well, a little bit of a, okay, there we go. Okay, here we go. Funko. Not a chart I would buy. Not a chart I would buy. Here's the first thing you look at when you look at a chart. You look to see the direction it's going in. Well, this one is not going in the right direction. It's going down. It's come up a little bit, but it still hasn't come up enough. So it wasn't. I wouldn't want to buy this Funko. It wouldn't be that fun. I don't think this is going to be that fun. And it's trending down. You never want to buy a trending down chart. So that's my opinion on Funko. Okay, so for everyone out there, if you want to get on the action trade alerts, it's real easy. All you have to do is go to DallasTradingFloor.com. And if you want to ask a question, I try to answer all the questions that come in, and that is at DallasTradingFloor.com. Now, if you are looking on TikTok, please note that we are moving a lot of our stuff to YouTube because TikTok may get banned, so we don't know that. But if you want to sign up for the action trade alerts and make sure that you're on the list so you know exactly what's happening with Dallas Trading Floor, please just go to my profile, click on the link, and you'll be taken directly to the sign-up page. So if we do lose TikTok, that's a way that you can still stay on Dallas Trading Floor. We'll be on Dallas Trading Floor. We'll be on YouTube, and it also will be on. We have a Facebook page and Periscope and Twitch. But the best way is on YouTube at youtube.com/Dallas Trading Floor, and we'll put that right up there as well. Okay, so everybody, thanks for watching today. I will be back at 2:30 tomorrow. Hopefully, some good trades. I did put out a trade alert, and subscribe to the trade alerts, and they are free. So, without much, I have one more comment on thing. All right. Okay, one last one. JMIA. Let's take a look at JMIA, just see if we can find a good chart on that one. JMIA. Gemma Technologies. That's a German-based company. Interesting. It's not a chart I would buy, but I will show it to you anyways. This is the chart on Gemma. Not a viable chart. It is moving up very, very strongly, but I wouldn't be in this one until it hit at least $50. It's currently telling at $16.28. It does have a lot of support here. I just wouldn't be in this one. It's not a good chart. This chart is more than likely going to come tumbling back down to earth based on what I'm seeing. So sorry about that. But hopefully I will have some other good charts to show you tomorrow. Thanks again, and I'll be back at 2:30. Thanks for writing in, and thanks for subscribing.